especially, unfortunately. So, okay, we have scheduled this live streaming today due to the ECB. Very, very, very important key event of the week after the Bank of Canada yesterday, which actually was a bit unchanged. So let me double check that you can hear me loud and clear, and you can see my screen. Perfect. So I can see that both platforms are working perfectly. So that's good. Okay, as I mentioned, today I'm gonna cover the ECB stuff, where we're standing, the aftermath of ECB, and we of course gonna scan the market and see how the current data, today's data, weekly data, the central banks have affected the markets, and actually the overview, a briefing regarding to euro, dollar, treasuries, commodities, cryptos, and so on and so forth. So you can ask anything you want. It's your session anyway, okay? It's your session, so I'm here to reply to any kind of questions that you have, okay? Okay, guys, it's loading. My screen is loading. Hopefully I'm not offline. Hopefully you can see me. Perfect. Okay. Okay, let's go through. I will share you my calendar, the calendar of the day. Okay, so you can have a quick view of the so far economic data and the results. So I'm going to explain the results and how they have affected our markets so far today. So let me just share somehow the Hot Forex calendar. Okay, perfect. I think you are able to see it with a bit of a disclaimer at the back. Okay, perfect. So here's where we're standing. Not many significant data for the time being, except of course from the ECB rate decision, which came unchanged as it was expected. As my title is saying, talks, but no action. It was pretty much something that it has been expected from everyone, a lot of economists, a lot of either traders, and actually is what the officials are keep repeating, that we won't take any action, and that's why at least for the interest rate, of course. Okay, so we're expecting this kind of result. Okay, so we have the ECB out. We have Mr. Biden speaking right now, has already started. I will try to check for any feedback, any important remarks in regards to his speech. But what's important, the most important for all, is the jobless claims, to give us another hint on whether we're going to see some kind of a boost and recovery in the labor market in the United States. Because after all, the labor data are very, very important for the reaction or the action that will be taken in the future for Federal Reserve. So, but also the ECB press conference starts in a minute. So that's what will cause volatility in the market. Miss Lagarde's speech. Okay. So sorry, at the same time, I'm doing a lot of stuff trying to share my MT4, okay, I have my MT4 as well ready over here. And before we see the markets let me quickly show you. Let me quickly explain what we are expecting and what could happen during Ms. Lagarde speech, even though she's not on yet, if I'm not mistaken, but she will in a minute. So, perfect. Guys, I remind you that this is your session. You can ask me anything you want, okay? So I will cover, as usual, the major currencies, the major assets, metals, and etc. And if you want something extra, let me know, okay? So, for the time being, where we're standing, as expected, the ECB didn't change anything in regards to the rate interest decision, and actually they're really stepping up a pace of bond purchase. Okay, so the ECB has indeed left the policy settings unchanged by keeping the interest rates negative. However, they have said, okay, that it will significantly increase the pace of asset purchases under the PPP program over the next months. So this is what we're really expecting for Ms. Lagarde to repeat once again. Okay, so so this is regards to the PPP extension. Okay, so the volumes so far, okay, have actually dropped below the expectations of ECB and the expectations of the market, especially the last few weeks. So it seems that, and we're gonna figure out with Ms. Lagarde's statement, it seems that there is some kind of a fight between the hawkish and the dovish ECB members. Okay. And this overall steady overall setting that they are trying to impose, and they have already imposed actually. So, however, what is clear, okay, what is clear is that the market, actually, what is clear to us and in general to the economists, is that the ECB is still in the game, and they're gonna address increases in yields, widen spreads, at least for now, okay? But at the same time, we have seen lately some ECB officials repeating that the PPP program, for those that are not aware of this kind of terms, PPP program is a program that they have used to boost the economy, to help the economy, okay? So what is clear is that even though they are they are still in the game, by extending, increasing yields, however, at the same time, the ECB repeated over the past, but right today as well with the statement that the overall PPP envelope, which remains unchanged, may not be used in full. Okay, so even though there is a massive stimulus, okay, not the same as the Fed, but massive, and they are really keen to increase, as I said, the asset purchases, the yields, the spreads, and etc. However, they will not use it in full. Ms. Lagarde will clarify today, actually right now. So I will keep an eye on the headlines, but before I go through the charts, let me quickly check again the data. So let's go back to the US. So the jobless claims came out slightly lower than expected, 712,000 from the 725,000 that was pretty much expected for the week ending 5th of March. And actually, let's see a bit and also the previous readings have been revised higher. Okay, that's quite key. So they revised higher, something that has been seen last week as well. So it's showing some kind of an increase in the initial claims, something that weighs on the dollar. It could, fundamentally wise at least, it could weigh on the dollar. Okay. So, so far, just to summarize a bit before I go through the chart, I should say that the strongest currency so far today has been Aussie, Australian dollar, while the weakest one was yen, so Japanese yen. In the meantime, stocks have been higher, yields have been slightly lower. So that was the overall picture. But let's scan the markets and see exactly where we're standing. Spot gold also higher, oil slightly higher, and so on and so forth. Let me show you my MT4 so you have a clear view of what we are just discussing. So I started receiving the remarks, some of the remarks or Ms. Lagarde, so I will keep an eye on it on my second screen. Okay. Hello everyone. Okay, people are asking. So Rudy is asking for dollar yen. I will be, just give me some time to see the reaction of euro and the reaction of the general market of stocks as well. Sorry. So, okay, let me share my screen. Not the appropriate setup. Okay, perfect. Okay, so let's go through. I will start with euro dollar, of course, and the dollar index. Okay, as usual, the most important ones. So, okay, let's see first dollar index. I'm really keen to see whether it's muted or not. Sorry, wrong template over here. So perfect. Okay, so this is the weekly chart. We need the 30 minutes chart more precisely. We have seen some kind of a boost the last hour. This is a 30 minutes chart, guys, okay? And I will flip from my intraday setup to my daily setup, depending on what we are discussing, okay? Since we're in a 30 minutes chart, I will use Stuart's strategy in regards to 30 minutes chart. That involves, as usual, the 5 and 9 exponential moving average. So we have seen some kind of a rounding bottom in the dollar index over here. So dollar has been boosted slightly, however, it's still below the 20 period moving average, and the cross over here hasn't really bullishly crossed yet. This hasn't been confirmed. There is a clash of the 5 and 9 exponential moving average. So we cannot really tell whether it's reversing for the intraday basis for the short term to the upside. Okay, we have seen, however, a nice support the last few hours at 91.50, which failed to break it, and it has rebounded. But momentum, you can see that momentum is still quite negative. RSI hasn't turned above 50 yet. MACD well below zero, so this boost might be a bit limited. Let's wait and see. And of course, we need to wait for that candle to close, that 30-minute candle to close, to see whether indeed we're gonna see a bullish close of 5 and 9. This is for 30 minutes chart, okay? I remind you. So dollar to the upside the last 2 hours. However, let's not forget since the Asia session, it has managed to find some kind of a support with momentums turning neutral in the overall picture. However, in regards to the daily chart, indeed it broke 3 months resistance at 91.50, but it quickly pulled down again. So a break, let me put a quick Fibonacci over here. A break today or tomorrow, which is Friday, the end of the week, a break of the 38.2 Fibonacci retracement, which is also very close to the resistance that now it has turned to support at 91.40. This could suggest that we have a rising bearish bias, something that could boost dollar back to the lows of 2021 and 2020. Okay, that was for dollar. Let's not forget that despite the bounce that we have seen the last 2 weeks in March in general, let's not forget that dollar remains in an overall downtrend. Okay, so as long as we don't have like a sign of a significant reversal, okay, at least this is the weekly chart, okay, at least at the above the 22.6, or and actually in between the 38 and 23% Fibonacci that has been set on this fall due to the pandemic, so around 93.50 or around 94, then the overall outlook, this is just for those that are interested in the daily and weekly chart, so for the long term, as long as we don't see a break of those resistance area, then the outlook, it doesn't seem to change from bearish to bullish. That's for the overall picture. Intraday, however, it has found a boost, remains, however, in the low territory, the low Bollinger Band area, so it's still in a negative bias intraday as well. Yeah, so intraday and daily, it remains negative, remains in a bearish bias. And for those that are interested in 30 minutes chart, only a confirmation of this bullish cross at the end of the hour, at the top of the hour, and a break of this 20 period 20 period moving average in the Bollinger could suggest some further advance. Okay, that's in regards to the euro dollar, to the dollar index. However, let's flip to the euro dollar, which is what we are really keen to see. I will flip to the 30 minutes chart because I want to see how the volatility, or whether Ms. Lagarde is causing any kind of volatility in the market. So we have some ups and downs, an indecision over here, so a doji candle over here. Okay, I will just shift your questions on the other screen so I could follow. Is anyone okay? Oops. Yeah. What is euro dollar? Okay. What about euro dollar? Prediction, please. Okay, I cannot provide prediction. I could discuss with you the analysis, the technical analysis, the fundamental analysis. So I will help you taking understanding actually what's going on, and maybe help you understanding also what the indicators are telling you. So let's get back. Euro dollar 30 minutes chart. We have seen a rejection of the so far resistance area at 119.70, or even more precisely 119.73. So a doji candle and the previous 30 minutes candle, however, a boost. So a bit of a muted reaction so far. We don't have any kind of direction. It seems that Ms. Lagarde didn't shock the market so far, at least. So let me see what she told us so far. So opening statement, highlights from Ms. Lagarde. Market rates pose risk to wider financial conditions. Inflation to pick up. This was what anyways expected from all over the place, from the global economy, because of the massive stimulus. The inflation is expected to rise even further. So that's and the reason why they are not really taking any action in regards to the rates is because this could lead to further to premature tightening, as she said. So they are not really ready, as they say, to increase rates, because this will lead to tightening. Okay, risks have become more balanced, but downside risks are higher in near term. So Ms. Lagarde once again highlighted that down risks due to the pandemic are still there, and they are extremely high for. She said near term. That suggests also not just daily picture, but also the very first half of 2021. Okay, so only they will consider some kind of a pressure on inflation only once pandemic fades. So we need to get rid of pandemic, to get out of the way. I assume with further vaccinations until the world is vaccinated, the whole world is vaccinated, or at least the European, if she's referring only to the European, I've not missed, I'm not, no, it's in regard to the world. So once pandemic fades, then they will actually monitor for pressures, and they will stay tuned for pressuring on inflation. Something that she highlights is that oil has been one of the reasons that inflation is high and will remain temporarily higher, but eventually it will fade early next year. So she doesn't really see any change on the inflation for 2021. So she really sees rising inflation for the whole 2021. And one reason of that is oil, as she said. So that's the so far remarks. I don't really want to spend time on her remarks right now. I prefer to just analyze the market with you. So, by the way, guys, if I'm speaking too fast, please let me know and I will slow down. I tend to be in a hurry and like speak a bit too fast. So let me know if you don't understand something, if you want me to explain something further, if you want me to repeat anything. Okay, don't be shy. Let me know. I will see your comment. So, sorry. Okay, let me check your comments. Perfect. So we are in euro dollar 30 minutes chart. Not a significant impact so far. You can see that it doesn't really, it started moving slightly, but not big spikes, not a lot of volatility. It's still above the 20 period moving average, a bit choppy with long tails to the downside, so that there is some bearish pressure, but we remain sideways, maybe until Ms. Lagarde finish her speech. So they tend to speak for 30 minutes, so I guess in 10 minutes they will be over. So it remains to the sideways, some long tails in the 30 minutes chart. So we could identify some kind of a range over here. So bouncing the last few hours between 119.40, 119.73. So that's the picture for the time being, even though it has been to the upside. Okay, it has been to the upside since yesterday open. yesterday European Open. So we have some kind of a trend line support, if I could call it like that. So can you see, by connecting the fractals, you can have some kind of a near-term support in the 30 minutes chart, which is very, very close, interestingly, with my 50 period moving average, which is not an ideal moving average for a 30 minutes chart, but it's very, very close to the trend line, my support. So yeah, so a break of this support could open the doors to yesterday's lows. But for the time being, the 20 period moving average remains untagged. The low of the day remains untagged. So far, so good, sideways. So a break for those that are interested in 30 minutes chart, a break of 119.41, along with a confirmation. We don't have yet a confirmation, but if we see an actual cross of the 5 exponential moving average below the 9 exponential moving average, then we could see that there is some kind of a bearish pressure in the 30 minutes chart, so the asset could go further lower in the very, very, very short near term. However, we don't have nothing yet. Just to clarify, we don't have a break of this immediate support. We don't have a bearish cross of the 5 and 9 exponential moving average. Momentums are quite positive. RSI is above 50. MACD is positive. Stochastic has sloped lower, but you can see that the slope is not aggressively to the downside, so remains around 40. So let's wait and see. 1 hour. In the meantime, yes, choppy, remains above its Bollingers, remains supported. So for the time being, intraday picture remains sideways. Daily picture, however, as you already know, we have seen some kind of a boost due to the dollar weakness and to the due to the dollar weakness, due to the reaction in stocks. We have seen U.S. equity futures extending gains. We have seen lower treasury yields. So that's why we have seen dollar extending lower the last 3 days. So it was concurrently with the lower treasury yields. So this week we had a rebound, as you can see over here, of the euro, pound, and euro dollar and any dollar currency. But interestingly, the momentum indicators remain below neutral, something that suggests that sellers are still there, are still boosting the market. And more precisely, you should use your Fibonacci, you should use your trading tools, you should use tools that help you identify key resistance and support levels, because this will help you identify whether a trend is reversing or not, the momentum is changing or not, whether the trend is running out of steam or not. So I'm in a daily chart, okay, and I can clearly see that despite this rebound of the euro dollar in the daily chart, my asset remains very close to the November, December, January, February 4 months low area, which it was support and now has converted into resistance, but also it hasn't managed to break the 50% Fibonacci level. So it hasn't managed to reverse at least the 50%, the half of the losses that have been seen in March, since that peak at 122.50, 122, I don't remember the exact number, 122.42 more precisely, and I haven't even plugged it in since the top of the year. I have used only the short-term one, so I will give you an indication, an understanding of what is important. It is important to see strong bullish candles and to see momentum changing, or even to see at least a reversal, okay, above, okay, I will ideally it's a 50% Fibonacci level, 120.40, which is very, very close to 20-day moving average. But the first key resistance area comes at the round 120, 000 number, and a key psychological level, okay? As long as the asset is moving below that, nothing really triggers that we have a reversal of the downtrend yet in the medium and long term. Intraday, however, we could see that remains sideways off the highs of the day for the time being, but some kind of a support, so we should be a bit patient to see what will eventually happen. So let's flip to dollar yen, as Mr. Rudy asked me. Pound yen, one of the, I think your favorite maybe asset, right? Because it has been in a boost for the past 1, 2, 3, 4, 5, 6, 7 weeks in a row. This is the weekly chart, okay? This is the weekly chart. A brilliant, strong, bullish candles the last 2 weeks. So March was very, very bullish for dollar yen. You can see how strong this candle is. Breaking, actually I will put my daily setup and I will shift later on to the hourly one. So you can see how strong these candles are, okay? And you can clearly see the break of the 50-day moving average, but also the touch and the retest of the 200-day moving average that has never broken since last year when the pandemic started. Okay, so more than a year. So nice boost with momentum. I'm not sure whether you can see it. I will enlarge it, but you can see that MACD in the weekly chart has turned positive. However, the signal line remains below 0, but the momentum is strongly positive in the weekly chart. Now, let's flip to the daily chart. The daily moving average have actually broken from the beginning of the year. So January 26th, it was when it was repeatedly, the 50-day moving average repeatedly retested, but eventually the asset moved above it on the 29th of January and eventually managed to, even though it struggled a bit, eventually managed to break the 200-day moving average at the key 106 level. Let me put it, there's a key resistance area which now has been converted into a key support area. So it has managed to break that 200-day moving average eventually in the end of February, if I'm not mistaken, 25th of April, and is moving upwards since then. So a small, tiny, temporary correction, sideways movement, more precisely, not even pullbacks on the 2nd of March and the last on Tuesday and Wednesday. But you can see that even though it has turned slightly lower on Tuesday and Wednesday, you can see that this looks to be more of a correction because it had been overbought for 1, 2, 3, 4 days in a row. So remember, extreme conditions tend to see afterwards some corrections. some maybe due to the profit-taking situation or fear, etc., of sentiment, of market sentiment. So it turned the last 2 days lower, but what is really, really key is that, can you see that it managed to keep week's support intact? So it hasn't broken weak support, and the tails, I will zoom in a bit. Can you see that Monday, Tuesday, Wednesday, Thursday, okay, this week's daily candles, they don't really have tails, lower tails, and if they have, they are tiny. So what that tells us? It tells us, guys, that this week the daily sentiment, the medium-term sentiment, as we call it, is more bullish than bearish. So there are more bulls than bears. There are bears trying to boost the asset lower, but they didn't took the control of the market yet, because we don't see any lower tails. We don't see any reversal of the momentum indicators. So RSI has made some kind of a correction from the 81.68 high, a correction, found some kind of support, and it's like pointing slightly higher or to the right hand side if you prefer, but MACD remains and extending higher. So the overall momentum for dollar yen remains positive. We don't have the uptrend. It doesn't really run out of steam according to the momentum indicators and the price reaction so far. And actually, I would like to put, if I manage to check whether there is some kind of, no, okay. Actually, there. So I will try to adjust the regression channel on to see whether it gives us any kind of indications, any kind of help. No, not background, I need array. So it has been in a channel since the 6th of January. It has broken the channel at 107.20 on the 4th of March. It boosted higher and it remains well above it. So key near-term support is at the week's lows. If it breaks, next support will be at the edge of this channel, upwards channel, at 107.60. Or if you are a short-term trader, then let me just flip to, you can see is the lower Bollingers that could provide you immediate support. It's the moving averages. So use these tools. Let's see the intraday. What's going on intraday? And let me put my intraday setup. So that's 1 hour chart in the dollar yen for the week since the 8th of March. So we have seen some kind of a lower highs, not lower lows. So it looks a bit like we had a low here, then a low here, another low here, and here. So this is the same. So yeah, it looks a bit like a descending triangle intraday. So it is still within the descending triangle. So pretty much the picture was here, intraday picture, short-term picture is a bit neutral. You can see that the MACD is flattened. If I plug it in again so you can clearly see it. MACD, here we are, quickly. So you can see that it's flattened, close to 0. RSI is actually at 50 and flattened. So there is not any either sign to the upside or a sign to the downside, more of a sideways movement, a neutral outlook for the short term, for the intraday picture. Okay, so this, you can see that even without the indicators, you can see that with the clash of the fast moving averages. Okay, so if it pushes further to the upside, key resistance will be the 108.73, which is a resistance area, so we could see it turning lower again and retesting the 108.30, the low of the week. Let's see the 30 minutes chart. Again, very, very neutral, sideways. Tried to retest the 20 period moving average. It didn't really manage. We had a bullish crossover here an hour ago, but the moving averages are actually pointing to the right hand side. So again, this suggests that that boost, a slight boost, might running out of steam already. So that was on yen. Hopefully that helped you, dear Rudy. And who else asked about yen? Hi, Del asked for many things. Having the dollar index bearish could mean that euro dollar, pound dollar could be bullish. True that, and that's why we saw this boost, but we are still in a range if you're referring to intraday. And as I said, okay, so we are still, depends on which time frame you're trading, of course, okay? We could say that they are bullish, and they actually were for since yesterday. This is euro dollar. But you know, if you really focus, if you're trading 1 hour chart or maybe 30 minutes chart, or if you scanning the markets right here, right now, you cannot really take a decision because it's sideways. So it might be bullish for now. It might be, dollar might be bearish, but as long as we don't see a break of today's resistance, we cannot confirm any decision, right? So you're right. Also, dollar Swiss and dollar yen could be bearish as dollar index. So, okay, of course, if dollar is bearish or the dollar crosses, will react accordingly. But don't stick with it. You have it in your mind that that's the obvious, that's the logic, but check the momentum, because we could say, okay, dollar is bearish and euro dollar, pound dollar could be bullish. Yes, of course. But is this bullishness over? Has it ended or not? Is there more? Can I catch up the trend or not? Am I too late or not? So that's why the momentum indicators are there, to help you take a decision and whether it's the right time to enter the market or not. Okay, hopefully I replied to your question, dear Hayten. Actually, your thought, it wasn't a question, your thought. Hi by you, welcome from Indonesia. Nice. I have done dollar yen, and I think you managed to see it because I finished just now. Okay, there are many people asking about gold, if I'm not mistaken. Hello Muhammad, hello Nias. Mamad, I cannot really understand what you're saying. I don't speak Arabic, sorry. Gold, so Pisang, what about gold? Let's flip to gold, because we have seen an interesting boost of gold this week. But as I replied to my Instagram questions, guys, the overall outlook for gold hasn't really changed. So this is a daily chart, okay? This is a daily chart. Remember that we keep seeing gold moving lower since July. So Okay, when you see it, July, bump, correction, sideways, down, correction, sideways, down, upwards, retesting again the 1970, 10, 20, and again a boost lower, where eventually it broke the, let me put the simple moving average. Actually, I will keep the exponential just to see the fast pace, a more fast pace analysis. So it eventually moved, broke the 200 day moving average, exponential moving average. But what is key, okay, is that it broke in February, in the end of February, was it? Let me just double check. Here it was. It eventually, in the 22nd, on the 26th of February, eventually broke this 9 months support, a support area, a level that has been seen as a support since June. Decisively break it on the 26th of February, and it remains below it so far. So if I zoom in a bit, okay, I want you to have a to pay close attention to what I'm going to show right now. It has indeed rebounded. Can you see? Rebounded this week, but this is a daily chart for those that are interested on the overall picture. It's still below 20-day moving average, below 50 moving average, 200 moving average, below the 9-month support that now has been converted into resistance. And it hasn't even managed to reverse more than 23% of the week's decline. This is a second Fibonacci level that I put it earlier. From the peak of 2021 for the year. So decline for the whole 2021 without managing to recover not even 23.6% of the losses. So the overall picture remains bearish, and the overall outlook, the daily chart, the weekly chart remains bearish. And so this boost, for the time being, looks to be just a correction before another attempt to the downside. And why is that? Why I'm telling that? Because check the MACD. Actually, check the RSI firstly. RSI remains below 50. I will put 50. Come on. Below 50 since the 8th of January. It hasn't managed to break it so far. So January, February, and so far in March. And right now, it has increased slightly, but it doesn't point to the upside. The slope, it doesn't really sloping higher, but it's stuck, moving sideways, something that suggests that the rally, the boost, the rebound might ending. And this is a conclusion that we could get from the very, very aggressive sell-off that we could see in MACD, which remains well below zero, very, very negative, suggesting a lot of bearish pressure. But also, I would like you to have a close look on this exponential bearish cross with the 50-day moving average crossing below the 200 exponential daily moving average. This is the so-called death cross, okay? Death cross. The 50 has crossed below the 200, something that suggests a lot of bearish momentum, a lot of bearish bias, a lot of selling pressure. So both the short-term momentum indicators, such as 20 and 50, remain below the long-term ones. So the outlook remains negative. I will check, by the way, the simple as well, because you may have using simple, and you can see that the death cross, it was even posted earlier than the early March, back in the mid of February, but it wasn't really confirmed. That was some kind of a clash, and eventually rise and rise and rise. So death cross in both exponential and simple moving average in the daily chart. So overall momentum remains negative. So we need a break and a reversal of the 50% of years 2021 losses, so a break above 1800s to suggest that we might see a reversal back to 1960 territory. Okay, that's the medium term. In the long term, we need, so long term meaning months, okay, for those that are interested in the monthly chart, we need a move back to 1920, 50% of 1 year's decline, in order for the outlook to change from negative to positive. And now a reversal, if I zoom in again, a reversal, if eventually this fails to move further to the upside and turns lower, of course the near-term support is at the low that we have seen this week at 1670, and if it breaks it quite decisively, then the next support level to be seen will be, let me show you, sorry, will be the, okay, I will go to the weekly chart so it will be more visible. It will be the 1600s. Okay, round number, key psychological level, but also a breadth above the 161 Fibonacci extension that it was seen back in the beginning of 2020. So a decisive break of this week's support could open the doors towards these lows. This is the overall picture, the long-term and medium-term outlook. Now, for those that are interested in the 1-hour chart, let me change my setting. Let me put some pivot points as well, why not? And let me save that as well as a template. Okay, perfect. Yes, close. So we have seen that it moved so far today above its pivot point, breaking the first resistance of the day, breaking the second resistance of the day, but it reversed the last few hours and is turning lower again, moving below the first resistance of the day, breaking the 20-day moving average, 20-hourly moving average, sorry, and we have some kind of a bearish crossover here, which hasn't been confirmed yet. So I will go further down to the 30 minutes chart to see what's going on. So rejected the second resistance of the day, pulled lower, 5 is below 9, suggesting further bearish pressure. MACD slightly lower, RSI below 50, but okay. So ATR is at 3.73, and we have seen a rejection of the near-term support over here of the latest fractal at 1730. So that could show some few pips further to the downside for gold for the 30 minutes chart, because 5 exponential moving average remains below 9. Momentum is quite weak. We had two quite strong bearish candles, and the moving average are still pointing to the downside. So yeah, that is some kind of a pressure still. So that was on gold. Hopefully I managed to explain everything. Pisang, Rafit, Fazard. Who else asked about gold? Seco, do you think gold will go down soon? So I just reply, I don't understand where you're referring to, which exactly, but if it turns profitable for you, well done. So let's flip to pound. Pound. Where is pound? Where is pound, 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 pound? Sorry, I accidentally substituted with a second euro, apparently. So pound, a bit similar with euro, but it definitely has been one of the biggest gainers of the year, of the last year and a half, mainly in 2020 and so far in 2021, since the very first lockdown. And we have explained many times why is that. It's because Brexit out of the way, uncertainty is out of the way, pound. Dollar weakness as well due to the massive stimulus, and the reopening of UK economy, and so on and so forth. So, okay, I will start with the intraday picture. Continuous rally since yesterday, remains in the upper Bollinger Band area. Short-term exponential moving average are still pointing to the upside. MACD is constantly positive, even though it has flattened, suggesting some consolidation, but remains positive. RSI it's at 70, remains positive. It's not really showing any slope or any reversal to the downside. So this suggests an overall continuation for the short term. You see the regression still in an upwards trajectory in the 1 hour chart. So we could see some ups and downs, but as long as it doesn't really turn for the 1 hour chart below the 20 period moving average in this 1 hour chart, which stands around 139.40, or more precisely, a better support area will be this one, in which we have the latest fractal at 139.18. So that's our latest fractal. Then the overall intraday outlook, the intraday outlook for pound remains positive. Now the overall one, again the same. We have this significant decrease of the positive momentum in the daily chart, but the fact that it managed to sustain a move above the 50-day moving average, which has never broken and has supported quite well, very well actually, the pound since October. As long as we don't see any rejection of that level, it remains in an upwards trajectory since October. And you can clearly see that. I could put a regression channel. So can you see? Remains in a continuous upwards move since the September, more precisely, with 50-day moving average, or even the trend line of my regression channel, a key support area. So yeah, so something that could trigger our attention. will be a close to 9 above the 20-day moving average. So this could suggest a retest of 140 territory, while a break of 140 territory could suggest a retest of the highs of the year at 141 and 142 area. Okay, so that was on pound. Gold. Aussie. Okay, Aussie, of course. Aussie. Okay. So Aussie, as I said, it was one of the biggest gainers so far today. And if I just get rid of the Fibonacci so you can see the boost, this is the 1 hour chart. So spiked higher, 77.83, the high of the day, the week, if I'm not mistaken. It didn't manage to extend further to the upside, slightly lower, so slightly lower the last 2 hours. Let me double check whether we have any further news from Ms. Lagarde, just to be sure that nothing else is really happening. Okay. So slightly lower than commodity correlated currency. Momentum, however, remains positive, remains above the 20-day moving average. However, the fast MAs are turning slightly lower. Let's check the 30 minutes chart to see whether we're going to see some kind of a correction. And this looks to be the case. This is the 30 minutes chart. My exponential moving average over here have already bearishly crossed with our RSI at 49. Let me put the fast stochastics, which is the indicator that I tend to use for such fast time frames. So it's pointing. Can you see that? No, you can't because my head is in front of it. Okay, so yeah, you can't right now. So can you see how aggressively lower the stochastic turn? So that suggests, along with the bearish cross and the slope, the negative slope of the fast moving average, suggests that we have some intraday pressure, not actually intraday, some kind of a very, very short time frame pressure, like in the 30-minute chart. So, and you can see from the body of this candle. So, this is a 30 minutes chart. It's closing in 3 minutes. If it remains below the 20-period moving average, then it could turn, it could retest the lower Bollinger at 0.7744. However, of course, the overall picture of the Aussie remains positive. It's in an upward trajectory since the pandemic mania in the first quarter of 2020. It has done a significant pullback the last 2 weeks, but interestingly, it managed to sustain this 0.76 support. So let's wait and see. Definitely a key resistance area for those that are interested in the daily charts. It will be the 20-day moving average at 0.7785. Okay. In the long term remains positive. In the daily chart remains neutral, and in the intraday picture it has turned lower. That was for Aussie. I cannot tell bull or bear, but I have already analyzed it, I'm afraid. I think I covered it. Yeah, if you want it again, let me know. Gold is covered, Oz is covered. Okay, guys. What do you think is going to happen to gold with the stimulus pass? A better question will be, what do you think will happen to the dollar if with the stimulus pass? So, okay, just simply saying, such massive stimulus as the 1.9 trillion in the US, what does that suggest? Suggests that Fed will provide more money, more cash, printing more money. So this is something that is inversely correlated with the country's currency. So massive stimuluses, printing money, is actually bearish for the currency because it will lose its value. So cheaper dollar. Massive stimulus equals with cheaper dollar. If we have cheaper dollar, then dollar crosses will benefit. So in regards to gold, and I'm not in gold. Let me shift to gold again. Where is it? I had it right here and I've lost it. Boom! Can you see that? That's just the 30 minutes chart. It reversed down 1, 2, 3 strong bullish candles below the first resistance of the day and ready to retest or even break this pivot point. So it's turning lower. Very interesting. Bam, bam. Support at the pivot and the confluence of the Bollingers. Nice. Okay. So, okay, in regards to gold now, so you should understand, as I said, massive stimuluses tend to, and fundamentally, theoretically, suggest cheap currency, so they depreciate the value of the currency. So what about gold? For gold, obviously, if we take it theoretically wise, a cheap dollar suggests higher gold, right? But gold is a bit tricky because gold, first of all, reacts and is correlated with the treasury yields. So so as long as we see, if we see actually treasury yields decline or pulling back significantly, then we could see gold continue to moving higher. However, if the treasury yields continue to be strong and to rise higher, then gold could continue to remain lower despite a cheap dollar. And you should really have in mind, okay, something that we tend to repeat. Sorry. So that gold tends to be often used as a hedge for hedging against inflation. So increasing in value as the purchase power of the dollar declines. However, government bonds are considered to be a safer investment for when the markets are in a severe uncertainty, fear, and whatever. So, if the inflation rises, okay, the might turn to attract some kind of investments. So it's not solely in regards to a cheap dollar. Okay, so have this in mind, please. What else? If you haven't understood, if I didn't explain it very, very well, let me know and I will try to give some examples or explain it in more simple terms. So let me see the remainder of the questions. Hello, Tata Prashad. Have seen that. Guys, if you have you keep asking me things that I have already covered. Anyway, once I end the session, you can drag and drop. You can go back and see my analysis on the particular asset that I have already covered. Now, an asset that I haven't covered, and Emmanuel asked for it. It was EuroCAD. I think we had inventories as well today, right? EuroCAD. Let me double check in regards to the inventories. EuroCAD. Okay, here is EuroCAD as well. So inventories, they will be out in come on, let me double check inventories. We have the inventories out in an hour. Okay, fair enough. So that's why we have a sideways movement in EuroCAD, dear Emmanuel. Sideways movement since Tuesday. So this is the 1 hour chart, very, very choppy, bouncing away from 150.68 and away from 150.20. So there is nothing really clear, something to say over here, just a sideways movement intraday between the first resistance of the day, and if you connect the fractals, it will give you again the same resistance, immediate resistance, and the 150.16. This is a range. Oops, wrong. So in a ranking market, bouncing, very, very neutral, sideways. So I cannot really analyze anything in the 1 hour chart. It's flat. You can clearly see that. Now, if you are referring to the daily chart, it's been to the sideways, to the downside for since the beginning of the year, if I'm not mistaken. Right? Yeah, end of December 2020. And this is a weekly chart. How can you see how strong and full body this candle is? So the overall picture remains negative. However, it's struggling to move further to the downside because right now it's at a key psychological support level. This is a support level, a very interesting support level that has remained untapped since March. So only a break of the 150, I will round it up, 150 key psychological level, only a break of that level could open the doors further to the downside to territories that we have seen back in the beginning of 2020 and even in the 2021. So for the long term, it remains down, but if it manages also to break the 150 territory, then it's like a free fall, and with next real resistance, support, down to 147 areas, 144 even. Okay, that's the long term. I cannot really tell something about intraday. It's choppy sideways. Daily, it had some kind of a correction the last 2 days, but is well in a sell-off with strong bearish candles last week. So that was some kind of a correction. Negative bias, negative outlook remains. Hopefully that helped you. Thank you for your comments. Can you explain how do you use the momentum indicators? So some of the indicators that I'm using are MACD and RSI and stochastic for the intraday basis. So literally, if you have ever tried MACD, so it has that neutral zone at 0. So if there are some long histograms below 0, that's a negative bias, especially if the histogram is below the signal line. The signal is with a red line. Now, if eventually the asset started turning higher, like, so if we see the MACD slightly turning close to 0 with signal line below, still below the 0 line, so still negative, this suggests that we have some kind of a fight from bulls, but the overall picture remains negative. We need to see a cross of both histograms and signal line above 0 in order to suggest that the outlook has turned into a positive one, okay? So you can see that, like for example here, okay? We had some kind of a rebound, but we weren't sure because it was it was still neutral. But the next day, we had another bullish positive candle, okay? With MACD, actually the intraday picture is even better. Let me show you the intraday stuff. I cannot really explain right now in full how you could use MACD. We have webinars for that. But briefly saying, this kind of performance, how can I say that? This kind of performance for MACD suggests that there is bullish bias. So every time that is, we could say it's bullishly crossed, so the histogram over here, the histogram over here is starting to detect it and to move above the signal line. So that's the very first sign that bulls are back in control, or they are trying to gain the control. Another bullish cross was that one over here, that one over here. So bullish cross. Another one was here. You can see that we have a rebound and we have bullish also a bias from MACD, confirming that there are some further moves to the upside, and so on and so forth. You need to study a bit the MACD. We have a webinar for MACD, and you can use it. It's a very useful indicator. So what else? Pound yen, guys, I'm running out of steam a bit, so I will finish the session soonish. Pound yen, a very volatile asset, and I have it somewhere. Come on. Pound yen. Okay, here we are, one of the most volatile assets in the forex industry, rejected in this 30 minutes chart to break the resistance of the day at 141.67. It has some kind of it's trying to confirm some kind of an evening star formation here, but it hasn't really, the structure hasn't really ended yet, so we cannot really tell. Fast moving average, they point to the right hand side, so we don't have a clear picture. However, remains in an upwards trajectory since the whole week. So this is the 30 minutes chart, remains up. We need to see, we need to wait for another 15 minutes for that candle to close to see whether it's really giving any sign of a potential correction, a pullback like the one over here. For the time being, we don't have something. MACD is positive, RSI is above 50, so again positive, remains above the 20 period moving average, very close to the highs of the day, so for the time being remains positive. Overall, of course, it's positive. You can see how massive this MACD is, remains in a continuous upwards trend, but right now is at the resistance that has never been seen since 2018. So if it managed to break that level, the next long-term resistance is at 52, 53 area, round number, and the very next one is coming back to the highs of 2018, 156.50. So keep an eye. It's a bit overbought, so we might see some kind of pullbacks, but if I just see RSI, you can see that there is further steam to the upside in the long term. There is area to be covered still. Daily continues higher. As long as it doesn't break the 20-day moving average, the outlook remains positive. Intraday, some kind of a pullback in the 30 minutes chart, but we cannot really tell yet. Bravo, Ms. Mela. Thank you. You're absolutely right. Guys, I'm running out of steam. I think I'm going to close the session. I cannot really find any further questions, so I need to call it a date. Unfortunately, I cannot really see the Facebook questions. Hopefully, there's nothing that I haven't covered over there. So yeah, that was pretty much it from my side. Just a quick update, summary of what we have, where we're standing. So we had initial claim drops in US initial claims, okay, something that could actually could it's something that doesn't really suggest any kind of a miss of the NFP for March. So still the estimations are for NFP to gain up to 500,000, so 5 million payrolls. So it's nothing really worrying in regards to the jobs in the US. ECB on the other side, and according to Ms. Lagarde comments and remarks, ECB lifted the growth forecast. However, they still see risk outlook in the near term, but a more balanced one. So they are still positive for the economic growth for the year, but they are a bit like how can I say? They don't really believe that we will see a full recovery until next year, and they don't really see the inflation to be controlled or balanced until 2022. So they have also, what else? Let me double check. The rates had to remain unchanged. Ms. Lagarde also said that energy and basic good price inflation coupled with supply constraints will feed a higher rate this year. Wages pressures might also likely to remain subdued. So pretty much the overall feedback that we're getting from ECB is that they are pretty much based their action on the assumption that the impact of the pandemic will fade, but not in the near term. And they will, what else? We said about PPP. They will not use it in full, but they will increase they will increase it. I think I covered everything. I cannot really see something significant from ECB for the time being that should be stated right now. So there hasn't been much really to digest from the press conference. That's why the euro and the market hasn't changed significantly. So yeah, they came in line with market's expectation. That's why we haven't seen a huge volatility. So yeah, that's the case. Even in the DAX, very choppy DAX. So that was pretty much it, guys. Let me just scan quickly my news feed. Okay, something that we haven't covered was oil. It remains higher in the New York Open. It's around $65 after retesting 65.62. So fundamentals in the long term, we said that they suggest support of the oil, with OPEC very disciplined. Okay, so actually overall it remains supported. Now in the intraday picture, do I have quickly oil over here? Remains in an upwards trajectory. Any reversal is due to any geopolitical or near-term concerns, but yeah, oil remains positive. So yeah, I think I'm done for the day. Hopefully I replied to all of your questions. Dear Ram, I have replied for dollar yen. I will finish the session right now, and you will be able to see the recording and go back to the analysis of dollar yen, so you can see the analysis of dollar yen. So that was from me for today. Thank you for attending our session. Hope you're having a great day ahead. The most important and the spotlights of the week are over. It was ECB and Bank of Canada, but we have some data tomorrow as well. We have the inflation from Germany and the inflation. And the labor data from Canada, along with the producer price index from US to finish the week. And that was pretty much it. So keep an eye on those data for tomorrow. Have a great day ahead. Take care and see you again next week. Bye-bye, guys. Bye.